And Halima, let's just talk about what's happened to prices here. Despite these cuts, you saw prices down significantly last week. I think the worst week we've seen for oil since back to August. And that has to be because of concerns about a broader recession. That seems that it would help Saudi Arabia and some of these OPEC states give a justification for why they're doing this.
I mean, absolutely. I mean, we continue to see fears about rate hikes, fears about recession driving prices lower. And that has been the argument that the OPEC members have been making for some time, that essentially they needed to come into the market and essentially sort of put in a floor because we were having this sell-off being driven by recessionary concerns. And so I do think the OPEC action has certainly put in a floor. But the question is, how much can they overcome the sort of fears about a global recession?
And I guess just this war of words, things certainly have heated up. Saudi Arabia last week taking that extreme step of trying to put out a press release saying, no, the administration is wrong. The U.S. administration is wrong in what they're doing. What does this mean, this kind of heated up rhetoric between Saudi Arabia and the United States?
I mean, Becky, it's happening in the midst of the worst energy crisis in decades. And the question is, as Europe prepares for the sixth package of EU sanctions, which will embargo Russian oil into Europe, which will ban the provision of Western services to move Russian barrels anywhere in the world, we have this price cap that's coming into place. We don't know if it's going to work or not to basically enable Russian barrels to continue to move. Is this the moment when we need to have or want to have this ratcheting up of tensions with Saudi Arabia? Because we predict there's going to be about a 1.5 million barrel a day deficit in Europe that somebody's going to have to fill when that embargo starts. So the question is there an off-ramp? And Congress has gotten involved in the game in a big way, talking about banning arms sales, this NOPEC bill, which would subject OPEC members to Sherman antitrust legislation. So the question is, does the White House try to dial this back because they see what's potentially coming in terms of disruptions come December?
Yeah, those concerns about the potential disruptions in December, I mean, this was coming as our SPR, our Strategic Petroleum Reserve, has been depleted. That was another thing. I think the U.S. administration probably thought that we were going to be able to refill the SPR before you got into any of these issues, that maybe U.S. production would increase. But U.S. productions run into all kinds of problems, including issues with labor, trying to get some of those things there, and higher prices for doing any of this stuff.
I mean, Becky, this is the challenge for the Biden administration. I think they believed that they could do this basically a million barrel a day release, and that come fall, U.S. producers would step up and fill that gap, and they have been unable to do so. So again, as we head into December, who's going to fill a potential supply gap when these EU sanctions kick in? And the Biden administration is set to announce measures this week to try to bring down retail gasoline prices. So we're watching. Could you potentially see the U.S. do a product export ban, a temporary product export ban? That might bring down retail gasoline prices here, but that could impose enormous pain on our allies. Think about the Europeans. They're going to ban refined products from Russia come February. They are facing such a serious economic crisis with factories and energy-intensive industries having to suspend operations. So it's going to be very important to see what the Biden administration does this week, because, again, a product export ban could potentially relieve some pain at the pump here, but could basically export more pain to our key allies in Europe.